Good morning, everybody. This is the Breakfast Show, Money Talk with SmartRobie. I'm your host, Martin Wong. So hopefully we have sorted out the technical difficulty that we faced yesterday, and it's been a real challenge trying to get the broadcast out on time and live and yet not lagging. I hope this video is coming to you live, and it's expected by our audience that we should have a quality streaming, right? So this is we fix out some of the notion, but let's get started on the morning what we're going to talk about today. All right, so meanwhile, I do hope you can share the video, live video, the Breakfast Show Morning Talk in your timeline, so more people can enjoy this privilege information that we are sharing here. Okay, so let me just do a bit of sharing on my side here, and we should be able to get started very soon. Okay, so I do hope you can share in your timeline. I really appreciate that one, and then more people can have the information that I'm about to present to you, which is, in my opinion, are fairly important considering the market that we have right now is at what stage, everybody? It is at market recovery stage, isn't it? Yesterday we were talking about it. And remember yesterday, we had the market moving back to 1500. That was the yesterday market that we saw. And we were kind of surprised the market did do, but this morning, last check, it was down just 2 points in here. But more on our next story. Shall we get started? Now, yesterday we were kind of surprised with the recovery that we've seen in US. The market continued to move up back to 200 points then here. And what we had was very nice actually. This is one of the reasons why we really like it. Is because the continuing reopening of the US market. Like it for what you call it, the reopening of US has been very controversial. And yesterday, we have seen Donald Trump having a slew of protests, from the Black Lives Only, and this is ongoing too. So he is appearing less and less in the TV, and we all know one of the reasons why he's doing it is because he's trying to avoid the press. No doubt he has to wear that mask back again. But US has already decided, and it continued to go higher. So make sure you check out some of this tomorrow's session at 9:30. But let's go on to our first story for today. Now, first story all today is no other than in the Edge CEO morning brief. Okay, so hope you can see this on the chart. And what it simply says that, look, this market rally has been what we call a V-shaped recovery. Earnings need to be coming. Now, if you look at this chart, it's very interesting. You can see in 2019, it was a bit of a mixed bag. First quarter, we have a down month. Right, minus 59% in terms of year on growth. But as you move on to the third and fourth quarter, this is like 100-meter sprint. So you start out slow, first quarter, second quarter, but you finish strong on the third and fourth quarter of 2019. Similarly, right now in the first quarter and second quarter, we started out very badly. Of course, the second quarter is the COVID-19 that you have seen in here from the chart. And now we need to move back up. Very important, need to move back up. And hopefully, we do see the third and fourth quarter is a good recovery, right? But things will depend on how fast we reopen. Now, the story focused on the KLSE, which has been a top performer in the region, a minus 5.5% year to date, and it has been a V recovery. Of course, all things being the same, yesterday program, the morning talk show, I did talk about the U shape, which is a much better in here. So right now, our KLSE market, many things has been factored in. Okay, so far the post COVID-19 recovery, the rubber glove, better margin, which is the ASP, which again I will talk about it tonight, 9:30, and also the semiconductor growth. The only thing which haven't been established is the earning from our Bursa listing company, right? So if the earnings from minus 35% that you see on the right hand side of the slide moving up to 12%, and that's going to be good. But usually charts move faster than the earnings. We all know that, right? We already talked about that the stock market move more 6 months, 9 months ahead of the economy, and this economy pinned down right to the company's earnings. So to take note for that one. All right. Now, if you like what you see so far, give me a thumbs up and do share this in your timeline so more people will benefit. All right. And don't forget to download a copy of SmartRobie from the Google and App Store. The apps that can help your money to talk to you. All right, let's look at the second story that we have so far on Star Business. Is another interest rate cut. Not this year, okay? It is unlikely they're going to have an interest rate cut. Right now, a lot of people are already shouting, oh, interest rate so low, so low. That's why we see a big money flow really flow out from the fixed deposit into the stock market, buying good dividend shares in here. Now, the story focus that this year is unlikely to have an interest rate cut, which is FY20. A rate cut may have in the first half of 21. So that means a lot of the banking stock will be depressed because of the margins. You know, they make money between the spread, between the BLR. At one point in time, if we do head to the negative interest rate like we've seen in Europe and US, what is going to happen? You know, when you put your money into a bank, it will be interesting because you have to pay. You have to pay the bank to keep your interest rate there. All right. So this is what we are really experiencing now. Okay, let's go on to our next story, shall we? Okay, and also do take note. The report also talk about construction sector. It's likely to fall minus 13% year on year. But there's a lot of talk also at the same time. The government need to reopen back the ECRL and the high-speed railway and the few projects construction. It is coming back, but it's very, very slow. All right, let's go on to our next story in here. Now, the next story is 2 undervalued stocks that we have for you today. It is definitely for the strong hearts, those of you who have courage like a lion. You can go in and buy the oil and gas, which is Serba Dynamics. Okay, take time to accumulate. It is time to use a Robie trading plan. We will see. Okay, so let's look at the Serba Dynamics right now. All right, and we can see that on the right hand side. So let's look at the stock price. Right, it is up 1.2% probably on this new, and Robie rated it 7 out of 8. What can you go? Now it is have a ROE about 18%, and yet this news talks about expanding to Indonesia and Zambia with a total contract of 544 million, which means the returns is going to be there, right? The dividend is going to be maintained. Something hasn't moved yet, so let's look on. Let's look at the charts in here. Okay, the stock charts. Right now you can see it is being supported very well around the 160 level. You can see on the chart 160 level in here. Let's also look at the trading plan for Serba Dynamics, which is a very good stocks in my opinion, right? Buy at 187, buy at 170, which is a pullback. Right now it's pullback. This is the time to accumulate. And what do you get? You get a 3% dividend and a little bit of upside if oil and gas are coming back. So it's going to be a lot on what you think the oil and gas is going to be happening in there. So do take note of the Serba Dynamics, good undervalued stocks. Now, usually we want to pick those stocks that is undervalued, not many people talking about. Right now, we did talk about the rubber industry, and we did pick one yesterday for our premium alert, which is Rubberex. Okay, let's go on to our next story, shall we? So our next story is Gpacket. That's right, we always talk about Gpacket, how positive that he has gone up. And also let's look at the chart, Gpacket here. Okay, and I'll bring up the chart. So you can see from the chart on the right hand side, you can see way up and all the way down. Okay, so if you look at it, the chart really expanded up very, very fast and came down also. Now you may think of it, hey, you know, revenue is up 50%. Why is the chart coming down? I also scratching my head here. I say, why does this good news bring up the depressed price? Will it bring up the depressed price? So the same reports, which is covered by Star and Technology, says that revenue jumped 147%. Okay, from 140 jump 50%, 147 million from 98 million for the same quarter. Now everything triple, really do good growth. Solution business registered triple digit growth, communication services plus 41%, digital services 126% in here. And they did talk about the Keeper Live, which you normally see when you go into shopping malls. where they have that digital camera in there, and that's part of Gpacket in here. But why is the price so depressed? Can you imagine if you exited, when you bought at the Pentagon 5th of April, and if you did not exit, you are under the water. After how many long? 5th of April until now, which is almost 3 months. So a lot of stocks generally runs about 2 months. That's why we always target a 2-month period when you want to hold this, okay? Now, what is your thought on Gpacket? Type it in there. I would like to see what your thought on Gpacket. The price shouldn't go down that much. Is it because of the news? Is it because of syndicate play? Let me know. Type in your result in there, and I'd really like to see what is your comment there too. Now, let's go on to the next news that we have. Right? It's no other than another undervalued stocks, right? Which is Allianze. That's right. Allianze rated 5 out. It is one of those boring sectors, insurance, not the technology, not the rubber glove. But this news talks about revenue growth less than 10% because of the single digit of COVID-19. We have found out that these earnings, which is one of the main story for this morning in here, is about can the earnings match up? We do know many of the earnings cannot match up, but what's more important is Q3 and Q4. But remember, if the stock price move up, you would have to buy things that is uncertain. That is for sure. So chart support resistance is the most important in here. Now going back to Allianze Malaysia in here, the core earnings are pretty much stabilized, not there, but the net profit really dropped almost 20% back to 79.5 million from 98 million ago. But it does pay a good dividend. Let's look at Allianze here, okay? Let me just get the spelling right first, okay? So this is Allianze. Let's look at the fundamentals, okay? Now the fundamentals in here, it's not a Sharia compliance, so do take note for our Muslim friend. It does pay a 4.6% dividend in here. It is trading at a discount, undervalued, almost 140%. Well, it could be a margin. Bottom line is the PE is very low, which is about 5. And generally, that's why Robie says that, look, this could be a value trap. A stock like this is worth 20 ringgit. To be frank, it's worth 20 ringgit. Right now, it's only doing 14 ringgit. Okay, 20 ringgit. Target price is 20 ringgit with the PE 7.5 times. If enough, this is my bottom guide. If there are enough analysts who can point out that this market will rated higher, means they rate this back high to 7.5 times, then we do see this market going up. But right now, with the PE of 5 times, you are really getting it at a good discount. Okay, let's look at the stock comment and chart. You can see right now holding up around $14. It did try to hit back 15 and then turn back the red pentagon in here. So of course, if you want to buy this, just use the trading plan or wait for the green pentagon to come. It's one of those stocks that move very slowly, but you're not going to lose a lot in here. Then again, who wants a boring sector, isn't it? We call it, right? Okay, let's move on to our next story, which is another healthcare. Now, why this story came out on Star Business is that more losses. That's right. They like to cover more losses counters. Okay, let's look at IHH. Okay, so IHH here, we have markets really at the PE of, let me show it again, a PE of 340 times. That's even more than Top Glove that we've seen before. And return of equity is less than 1%. I think it's going to slip to negative territory because this report talk about the net loss. That's right, net loss. Because the hospital during the COVID-19, people didn't go in for surgery. Now, a lot of private hospital works on surgery, things that is not critical, those rich man disease. That's right, rich man disease. Now, the COVID-19, they don't take in, right? They ask you to go to Sungai Buloh, isn't it? So this has always been the practice, not only in Malaysia, a lot of private hospitals in the world only take in those premium elective surgery. So this is how the private and the government kind of work in. The government will do more of the dirty work, the private sector will do more of the premium work. So because of the COVID-19, not many people are going to the hospital because they say, hey, I might get infected, I might sell weight lah. So that also depressed the earning. That's why it is a negative 220 million. But the story also talk about they also suffering another losses. This is in India, a Goodwill impairment of minus 400 million, plus a 60 million forex loss in India. So the expansion outside of Malaysia hasn't been that great. Now, this company like IHH, they have to expand out of the country, but it's a different ball game too. So do take note of this kind of thing and be aware of the factors that is usually used in expanding the market. Now, the next story we have for you is Oriental Holding. Everybody know this company, Oriental Holding, which is listed in, it's used to be the Lo Bun Siu lah, right? Remember the Honda car, right? It's still pricey despite what it is. Ratings of 2 out of 8 at 20 times PE, but the return on equity again is 2%. It does pay a nice dividend in here. They are more like a conglomerate. You know, they have Honda cars, they have hospital, they have property, they have plantation in here, and generally, you know, conglomerates like this, like Sam Darby, they have to look for a very economic growth from the country. If the economic of the GDP of the country doesn't grow that much, this will be impacted because they have to have resources on 5 different segments. Now let's look at the Oriental here. Right? Let me just show you, right? I'll just switch on to here. So ORIEN. Okay. So we look at Oriental, and we want to look at the website. Okay, let's look at the website. You can see Oriental is 2 out of 8 ratings in here. Not one of the best. Not exciting enough as well. Okay, I'm trying to get here. Yep, that's right. So it's a button. So they have the Honda cars. They have the plastics too. You know, like the SKP. They have La Plantation. They have Investment Holding, right? Which is, I think, their parent company and trading company too. So you can see all that in here. The news really focused on a net loss of minus 81 million compared to a profit 93 million in here, and revenues are down from 1.4 billion to minus 31 billion in here. Let's look at the chart, shall we? All right, let's look at the chart in here. Oriental. Okay, and okay, so look at the chart here. I'll click stock comment and chart here. That's right, but it actually moved up very nicely. You can see from a base around 490 right to 560. You have test and line change. It is actually converting back, but we just have a red pentagon in here. Maybe it's because of this bad news that is coming out. All right, so this bad news that is coming out, what do you think? Okay to buy? Not okay to buy? I'll leave it up to you, but if you do want to buy, use the Robie trading plan. All right, now let's look at our next story that we have for you. Is no other than our stock pick yesterday. Now our stock pick yesterday, we picked Rubberex and we picked KUB at 9:30. I have 2 stocks also for you today, right? Definitely let's look at the stocks that we have. Rubberex, okay, Rubberex, and let's look at the stock price. We're also going to look at the chart too. Okay, so let's look at the chart. Today is up 1%. We have a slew of stocks really moving up this morning. The Hata, the Kosan, and the Top Glove are all moving nicely. So we will discuss more tonight, okay? 9:30. So give me some time to prepare my presentation at 9:30 so you can come. So this is a stock that we have, Rubberex. It's, some people say it's one of the cheapest among the rubber glove. You know, Kosan is already $10. I think 9 something. Top Glove going to hit 20 soon. You have here, right? So this is the one that you can see the market at uptrust holding up. It will move up very, very slowly. Okay, take note of this one. So next one we have is KUB. What do you think of this chart? Do you like this chart? You like this Rubberex? Give me a thumbs up, all right? Type it in there. Then now this is KUB. You see yesterday it's up 4%. Now that's why we say it pays dividend to listen to Money Talk. All right, so we have KUB. It's up 4% right now. Very nice one from yesterday, 9:30. So make sure those of you who really want to trade the intraday one, 9:30, 10 o'clock, look at those premium alert. We're going to be looking at another premium alert here. Let's look at our premium alert for this morning. Go back to our main story in here, and you can see right in the middle there, hit that premium alert, and we will have, wow, we have AirAsia is back. Hey buddy, look at that. AirAsia sudah jalan lah, AirAsia, right? Now we talked about last week. You all remember the show last Wednesday? We talked about AirAsia. Right now, AirAsia is presenting. So are you excited? Those of you who want to buy AirAsia. All right, AirAsia 5099. Let's look at AirAsia, okay? All right. Hope I got you excited. We got to be excited, right? Early in the morning, right? Yeah, don't feel so sleepy. That's what this show is all about. Okay, it's up 3.4%. Let's look at the chart. Let's look at the chart whether it's worthwhile to buy or not. Okay, early bird gets the the first worm, we call it. Okay, so let's look at AirAsia. Of course, AirAsia, we did talk about it. There was a letter sent in by one of the members inside saying that, look, I did not consider, this is pending on last Wednesday, I did not look at the other expenses which goes into the calculation of the burn rate. Now we can see here, nice one, we have spring, we have the market recover back here. First one in there. Do you like it or not on the chart wise? If you like it with the spring, a rebound play, go in on AirAsia. But I don't want so much focus. Never mind, I'll just put in AirAsia for fun. Okay, so AirAsia, okay, for our stock pick. And next one is I have is PoHuat. Of course, in here we got AirAsia, we got home rates. Just take a look at them. Which one do you like? Okay, the other one I have is PoHuat, which is the I think it's a furniture 7088. Let's look at the stock price. Okay, 6% gain. Wonderful. Okay, let's look at the stock chart now. It's going to bring back to the stock chart. Okay, get the big one in here. So far, the transmission and the sound is coming in nicely, isn't it? So I hope that's great. Give me a thumbs up or share this in your group, so at least we know our efforts are reaching to you, so you can pick some great stock too. Now, right now, PoHuat is nice one in here. You can see a nice line change, classical Wyckoff range. Well, remember those of you who came for our 3-day masterclass, this is what we train you to do, and the stock just sit in front of you. You like this or not? So we shall go look at the fundamentals. So let's look at the fundamentals in here. Stock fundamentals. Wow, this is 6 out of 8. Another undervalued stock, right? That's what I like about it. Usually for those conservative one, you have here, it doesn't pay a dividend. I remember they do, right? Again, PE very low. Is it a value trap? We have to investigate further. Very similar to Oriental, which the forgotten stocks. No one want to talk about this. So in here, target price of $1.36 of a PE at 7.5 times. Right now is 5.8. You can see that, right? So let's look at PoHuat. 136. Can you go back to 136? Let's look at the stock chart. Stock chart here. 136. It's the target price. Right now, right? We may have a line. Oh yeah, check that one, guys. Green Pentagon. Okay, 136. Wow, he's going to take out that one. All right, how does it know? We will come in. So if you like that or not, go over your trading plan. So those are the two stocks that I pick. I'll make sure I take note of it, because tomorrow we're going to come back and review this. So let's move on to our next slide. And I want to close for this morning Money Talk session in here. I really welcome your company and we really appreciate. Now, those of you who want to take it to the next level in here, we do have this Saturday, our foundation Bursa version for our Malay friends for a 1-day VSA course. So join us. Registration is still open here. So those of you who want to take it to the next level or not, just use SmartRobie. You'll be fine too. Okay. And we'll teach you how to correct it. All right, tonight, the story that I'll be presenting, really giving you a deep look on the topic Hatta Kosan Top Glove Supermax, completely free. Please do share this talk in your timeline and also let your friends know. Tell you what, should you buy rubber glove or not? Is it still hot? Should I avoid it? What is the upside going forward? I will review it tonight with you guys. So make sure you join me tonight in here. And finally, if you are first time, many of you are first time, just type 1 in there so I do know, and join our Telegram group. We are growing, and many of the information that you present to, you can follow up through there, or download a copy of SmartRobie, which is completely free, and that will keep you updated. So that's all I have for today. Thank you for sharing this your time with me to get updated of the KLSE corporate news, Bursa headlines that will help you money talk with SmartRobie. That's all here. I'm Martin Wong signing off. I'll see you tomorrow. No, I see you tonight. Bye-bye.